Bitcoin. How low can it go? The crash. They want you to panic sell so they can buy everything. Bitcoin is crashing. The headlines are screaming. Fear is everywhere. And the same institutions that told you Bitcoin was dead at $15,000 are now quietly buying your coins. This is not a coincidence. This is a transfer of wealth. And if you don't understand the game being played right now, you are the exit liquidity. Let's begin. The fear machine has switched on. Open your phone. Scroll YouTube. Turn on financial news. Bitcoin is collapsing. How low can it go? Crypto winter is back. Retail investors wiped out. The language is emotional, urgent, dramatic, because fear is not accidental. Markets do not move on logic. They move on psychology. When Bitcoin is pumping, the media sells you dreams. When Bitcoin is dipping, the media sells you nightmares. But here's the dirty secret. Media narratives lag reality. Institutions move first. Retail reacts last. The headlines exist to make you feel unsafe. Right at the moment, the biggest players are loading their bags. How market manipulation actually works. Simple version? Let's simplify what's happening. Big money doesn't chase price. Big money creates conditions. They do it in 4 phases. Phase 1, accumulation. Quiet buying. Low headlines, no hype. Smart money accumulates when nobody cares. Phase 2, markup, price rises. Influencers return. Retail begins to notice. Phase 3, distribution, mainstream hype. ETFs approved. Bitcoin to 500K. Retail buys the top. Phase 4, panic and shakeout. Bad news floods the media. Price drops. Retail sells in fear. Smart money reaccumulates. Then the cycle repeats. This is not conspiracy theory. This is Wyckoff accumulation, taught in trading textbooks for 100 years. Crypto didn't invent manipulation. It just exposed it in real time. Why institutions want you to sell your Bitcoin? Let's be brutally honest. Bitcoin is not being adopted because institutions love freedom. They're buying because Bitcoin has a fixed supply. Governments are printing endlessly. Debt is mathematically unpayable. Fiat currencies are losing purchasing power. Central banks are trapped. Institutions know the system is cracking. So why scare you? Because if you hold Bitcoin, you control your wealth. If they hold Bitcoin, they control the future market. They don't want you wealthy. They want you liquidated. They want weak hands to hand over scarce assets. Fear is the weapon. Volatility is the tool. Media is the amplifier. The psychology of retail destruction. Retail investors lose money for one reason. They react emotionally. Let's walk through the emotional cycle. Price drops. Fear kicks in. What if it goes to 0? I'll sell and buy back lower. Price rebounds. Retail re-enters higher. Repeats until broke. The system feeds on panic. Institutions thrive on patience. When you feel maximum fear, you are closest to maximum opportunity. But your emotions don't know that. Your emotions are wired for survival, not investing. How low can Bitcoin really go? Realistic scenarios. Let's talk numbers without hopium. Bitcoin moves in violent cycles. Every bull market is followed by brutal corrections. Historically, Bitcoin drops 70–85% in bear markets. Bitcoin drops 30–50% in bull market pullbacks. Bitcoin loves to revisit key moving averages. Bitcoin loves to shake out leverage. So what are realistic downside zones? Not predictions. Scenarios. Scenario A, shallow shakeout. Healthy pullback in a larger bull trend. Institutions accumulate, retail panics. Then continuation upward. Scenario B, deep liquidity hunt. Macro fear, stock market turbulence. Bitcoin flushes, leveraged longs. Media calls the cycle over. Institutions quietly absorb supply. Scenario C, black swan event. Unexpected geopolitical or financial shock. Bitcoin drops violently. Paper hands capitulate. Smart money scoops historically cheap supply. Notice something? In every scenario, Bitcoin doesn't die. Only weak conviction does. On-chain data, the truth the media won't show you. While headlines scream panic, on-chain data whispers accumulation. Long-term holders are not selling. Whales are increasing holdings. Exchange balances are declining. Coins are moving to cold storage. Translation: smart money is not exiting, they're positioning. Retail is emotional, whales are strategic, the blockchain doesn't lie, the headlines do. ETFs, Wall Street, and the Trojan horse. Let's talk about ETFs. The moment Bitcoin ETFs were approved, Wall Street officially entered Bitcoin. This is not adoption, this is capture. ETFs allow institutions to control price exposure without retail controlling custody. They create synthetic demand, paper Bitcoin, price suppression tools, liquidity extraction mechanisms, and now, the same institutions that launched ETFs benefit from volatility. They make money on fees, trading, volatility, panic selling, reaccumulation. Bitcoin became a Wall Street product. That doesn't kill Bitcoin, but it changes the battlefield. The shakeout before the mega move. History repeats. Every major Bitcoin rally was preceded by maximum fear. 2013, Bitcoin is dead. 2017, crypto bubble burst. 2020, Bitcoin crashed with COVID. 2022, FTX destroyed crypto. And what happened next? New all-time highs, every single time. Not because Bitcoin is magic, but because monetary reality doesn't change. Fiat decays. Bitcoin is fixed. The system is fragile. Bitcoin is anti-fragile. Why governments secretly benefit from Bitcoin crashes? This will shock you. Governments do not want Bitcoin stable. They want it volatile. Why? Because volatility discredits it as money. It scares retirees. It keeps it speculative in the public mind. Meanwhile, governments explore CBDCs. Banks prepare digital currencies. Surveillance finance expands. Bitcoin volatility justifies control. But the irony? The more unstable fiat becomes, the more Bitcoin makes sense. The final trap. Sell now, buy back lower. This is the most dangerous thought in investing. I'll sell now and buy back lower. Sounds smart, feels logical. Destroys portfolios. Why? Because markets reverse when sentiment is darkest. You sell fear, you buy euphoria. Professionals buy fear, amateurs sell it. Timing the bottom is a trap. Time in the market beats timing the market. The people who win accumulate slowly, ignore headlines, hold through fear, think in years, not weeks. The transfer of wealth is happening in real time. Let me say this clearly. This is not a crash. This is a transfer. From emotional money, patient money, retail, institutions, fearful sellers, strategic accumulators. Bitcoin doesn't move wealth. Bitcoin reveals who understands money. What this means for you. No financial advice. This is not financial advice. This is financial awareness. You have 3 options. 1. Panic sell and hope to re-enter lower. 2. Freeze and let fear control you. 3. Understand the game and act intentionally. The system feeds on emotional decisions. The system punishes impatience. Bitcoin rewards those who understand the game being played. The big picture. No one wants to admit. Bitcoin is not just an asset. It is a hedge against monetary collapse, a hedge against debt explosions, a hedge against currency debasement, a hedge against financial repression. That's why institutions want it, not for freedom, for control. And the more they own, the less you can. Final warning. The next time you see Bitcoin is crashing, how low can it go? Crypto is dead. Ask yourself, who benefits from you believing that? Because history shows, every time they scare you out of your Bitcoin, they buy it, and then they hype it back to you at a higher price. Call to awareness. This is not about price. This is about power. Bitcoin doesn't care about your emotions. Markets don't care about your fear. Institutions don't care about your losses. The only person who can protect your financial future is you. Stay awake. Stay patient. Stay rational. Because the biggest crashes often come right before the biggest moves. Don't forget to like and subscribe. This is Felix. See you next time.